But let's try and understand what really is happening at Mass Financial. We've got Kamlesh Gandhi, the CMD, joining in on the show right now. Kamlesh, great to have you in ET Now. Thank you so much for your time. You know, you had guided earlier about a 25% AUM growth for the entire year, which is up from that 18-19% on run rate that one is used to seeing. What's changed operationally for you to stick to this guidance?
Good morning. So I might give you a broader picture because we are into silent period. So just to share with you that we have always been sharing the view that we'll grow anywhere between 20 to 25%. And I think this year, at the beginning of the year, we had given that guidance that we'll grow anywhere between 20 to 25%. And as of now, we look well on track.
Mr. Gandhi, the other thing, hi, firstly, very good morning. The other thing you're doing is you're moving into vehicles, right, which is auto loans. How is that playing out, and how is growth over there in terms of the numbers? How much will that contribute to overall growth this year?
I think if you see our wheels portfolio had contributed close to 12 to 15%, and we maintain that it will continue anywhere between 12 to 15% this year also on an expanded AUM. So slowly within next 3 to 5 years, we'd like to see this growing to around 20% of our AUM. But this year we say it anywhere between 12 to 15% of our AUM.
Okay, and you know, it's a relatively newer domain and portfolio for you. What gives you comfort that things will play out well from an asset quality standpoint, especially given that it's been a difficult kind of weather pattern, right? So could you give us some color, some texture on what's playing out on asset quality at this point, given everything that's playing out in the weather?
See, we have always maintained that the AUM will never grow at the cost of the quality of the assets and hence the profitability. So we'll be maintaining that. And we are watching the current situation very closely. But as I told you, as far as the current scenario is concerned, we are well on track. And if we can maintain the trajectory of our NPAs in the levels where we are comfortable, I think we should be in a position to maintain our 12 to 15% of contribution from the wheel segment.
Specifically, I want to talk about MSMEs as well, because that segment, Kamlesh, has consistently driven about 60% plus of your AUM growth. At what point does that concentration become a risk rather than a strength for you?
See, if you see, MSME has been a very wide market. Right? Given at our size, with the portfolio what we have built up, we have just scratched the surface. So within MSME, we have a lot of diversification, right from MEL to where we saw as to the ticket size of as low as around 1 lakh or so, right to SMEs where we give up to 5 to 7 crores of rupees. So within the MSME segment, we are well diversified, and looking at the market size, and I think we are well placed for at least a few more years to concentrate on MSME. And going forward on a group as a whole, we think that MSME should contribute around 50 to 60%, and the rest should come from wheels and the personal loan and the housing loan segment.
Growth, Mr. Gandhi, this time around looking stronger than what Q1 typically is. I'm not asking for any numbers. I'm saying industry-wide, do you feel that the growth is much stronger than what a typical Q1 is?
Yeah, it's if you see the headline numbers of many of the NBFCs also, they are showing a relatively stronger growth as compared to other Q1.
And therefore, do you think that full year, one, the growth will sustain, and two, likely beat what the guidances broadly have been across the board, probably at the end of Q4 when those guidances actually came through?
And I think looking at Q1, once again, I will reiterate that we would like to maintain the growth anywhere between 20 to 25%, irrespective of the opportunities what we get. So we personally believe that in the lending business, it is very important to grow steadily but solidly, because even in growing at around 20 to 25%, you double your AUM every 3.5 years. So besides the opportunity, it's also the strategic intent of the company to grow anywhere between 20 to 25%.
No, fair point. And Mr. Gandhi, last off, a possible concern, right, for Mars. I'm just trying to understand. You trade at roughly 2 times book, and therefore, for a 25% growth kind of business, the valuation looks slightly more subdued versus some of the other peers. One of the possible concerns could be succession to a certain extent. Are you comfortable with the way things are shaping up? I know there is a long runway even for you, sir, and hoping that. But do you believe that some bit of planning from a future leadership perspective is well in place for you?
See, I've shared this number of times that we are very strong second line of management. We have around 25 to 30 people who are working in the company for more than 25 years. If you see our presentation, all the senior team is more than 5 to 7 years with the company. So they are more than capable to take this company forward. Besides having a very solid promoter interest, the next generation from our side has already been in the business since last 10 years, showing a very strong promoter intent to be with the company, not for a few decades, but more than that. So from the promoter side and from the management side, we have shown a very strong strategic intent as far as the succession plans are concerned. And as far as I am concerned, I'm more on the strategic part of it. Since I have no other thing to do, I have an hands-on approach, but it's not something that it is required. It is by choice. So this a very strong second line accompanied by the promoters also having the insurable interest in the company. I think that there is no doubt about as far as the succession is concerned. And just to share with you that we have proved that in the past, not a desirable situation at all, but unfortunately we lost one of the co-founder 5 years back, and we have been in a position to maintain the trajectory of the growth and the quality of the assets and the profitability irrespective of that. So I think succession at Mass is well placed, and we are slated to create this company for generations.
Taken, sir. So last off, just trying to get a pulse of what's playing out on asset quality differently this time. The rains were delayed, but everyone we've been speaking to on ground says that asset quality has been robust. So generally, uh, with delayed rains, you tend to see some slippage there. No signs, at least at this point, from an industry standpoint, from your standpoint, if you can give us any color.
So such things will play out over a period of time. It does not play out immediately. So as we have always maintained that whether it is macro headwinds or tailwinds, it is for the individual companies to assess the risk at the ground level from time to time and take their credit decisions accordingly. So for companies like us who are always cautious, who are very steady in their growth, and if I share with you that even during a very tough period like COVID, we could maintain a good asset quality. So all these things will play it over a period of time. It will play out differently for different companies depending upon their approach to asset creation and how they dispense credit. So it will be more company specific rather than the industry as a whole.
Okay, Kamlesh, great to have you today on ET Now. Thank you so much for your time.
Thank you. Thank you. Thank you.
Okay.